Hi everyone, I'm Paul and welcome to my market update for the 10th of January 2023. This is my first one for the year. I hope you had a great holiday season and I wish you all the best for 2023. To kick off the year, we had a few bits of macro data last week and there seems to be some early signs that inflation is starting to ease. We've got some more data coming out at the end of this week, so we'll certainly get some more insight then. It's important to remember, however, that while some easing of inflation is a good thing, we're still at historically high levels of inflation and there's still a lot of work to do and many macro headwinds to navigate. I'm not going to go into any more detail than this, but my takeaway point is this. Don't be surprised to see some better than expected prints and for the market to react favorably. However, expect this strength to be short-lived because solving inflation, especially from these levels, is a really long road and we haven't really seen the kind of impacts that we'd expect in the job market or on economic growth to suggest that this job is anywhere near done yet. But enough of the macro chatter, let's jump into the charts and see how we've kicked off 2023. But before we do, it'd be great if you could like this video because that'll help other people to find it. And if you haven't already, make sure you subscribe to my channel and turn on notifications so that you never miss an update. These are quick, easy, and free ways for you to support my channel. Lastly, if you'd like to hear more from me and join a community of like-minded traders, then click the link in the description to subscribe to my free weekly newsletter and to join our Discord. It'd be great to see you there. Now let's jump into today's video. So the first chart we're going to look at today is the DXY. Now you can see pretty much over the whole Christmas break or the holiday break, we've just had this, sideways chop, which has been pretty boring and pretty frustrating to be involved in. But you can see now that we've come out of the break, we come into the new year after taking out these relative equal highs here. We didn't quite trade up into this volume imbalance, but you can see the market's traded quite aggressively down after going through those relative equal highs. We've taken out this sell side liquidity, these relative equal lows, and we've traded right down into this bullish fair value gap, which you can see is all the way from back over here. Now, this is a real line in the sand for the DXY. I think if we can't turn around, here, and certainly if we lose, this level down here, so around 102, I think we're going to see much lower prices on the DXY, which obviously would equate to a rally in risk assets. Now, based on what I think is happening with the macro picture, I don't think we're going to see that. What I think we're going to see is the DXY react to this fair value gap down here, this internal liquidity, and will reverse and then trade up into this volume imbalance here, and then we'll just have to see what happens from there. But I wouldn't be surprised if we see a rally in the DXY, especially if the macroeconomic data is favorable towards that, and then we could trade even up into this fair value gap up here. That's probably stretching a little bit too far into the future at the moment, but certainly in the near term, that's what I'm expecting. And as I said, there's a real line in the sand here for the DXY. Either we reverse here or we have follow through, and then I think we'll see lower prices on the DXY and then obviously a reaction from risk assets from there. Now, to help build some confluence on that view on the DXY, a good pair to look at is the EURUSD. So you can see if we zoom in on the euro just here, it didn't exactly play out as I'd anticipated. We were trading down here when I sort of posted this up into our Discord and put it out on my newsletter. We hadn't quite filled this imbalance, this bearish fair value gap just here, but you can see we had a quite strong move on the market today and we came right up, we took out this buy side liquidity here and we took out this previous swing high here. You can see the market almost instantly reacted and it's pulled back and we're now trading back under that level. Time will tell whether we reverse this and this sort of plays out as I anticipated, where we take out this sell side liquidity here. But we have had a break in market structure. We've now swept these highs, and so we'll just have to see how that plays out. Obviously very similar to the DXY. This is probably a little bit easier to read than the DXY because the euros rallied quite strongly all the way from under parity all the way now up to almost this 108 level, which is a strong point of resistance. And you can see we've now painted what could be the beginning of a swing high, and then we'll potentially attack this sell side liquidity here. So that seems to marry up fairly neatly with what I think might happen on the DXY. But again, the next sort of couple of days are going to be quite key. If we switch over to the ES or the S&P 500 now, you can see this has played out quite neatly, almost too well. I didn't really expect that the market would react like this once we traded up into this bearish fair value gap right here. So you can see after we, took out the sell side liquidity here, we painted this swing low. We've obviously consolidated over this holiday period, and you can see we've created these relative equal highs, this buy side liquidity here, and there was this volume imbalance which we've just been sort of trading into, and we didn't really quite fill it until this candle right here. Now I was expecting high prices. I was expecting us to trade up into this internal liquidity, into this bearish fair value gap. You can see we did that. We traded quite deep into it, but on the same day the market's pulled straight back, and you can see we're now back under that. And pretty much I think the next draw on liquidity is going to be this sell side liquidity here, and I think if we start to trade below that sort of 3,800 mark, I think we're going to see a continuation of a trend for lower prices. If we switch over to crypto now and looking specifically at Bitcoin, the volatility has been almost non-existent on Bitcoin, and you can just see this range that we've been stuck in for a long time has just been super painful, and we've just followed this trend of dumping, consolidating, dumping, consolidating, dumping, consolidating, and a bit like a bouncy ball, you can just see each time the reaction's been less and less. This reaction was smaller again. Now I sort of put these two scenarios forward based on what kind of volatility reaction we might get. You can see we had quite a strong reaction on the S&P, but we just didn't get that same kind of reaction in Bitcoin. You can see it was quite tepid. I thought there was a chance we might get, one of those God candles that we have seen in crypto in the past, and we'd trade right up into this bearish fair value gap up here, right up into the 19,000s, taking out this buy side liquidity, cleaning out all the buy stops residing up here. We just didn't get that. You can see we obviously took out this buy side liquidity here. We've traded into this bearish fair value gap here, and we've rebalanced all of that inefficiency there. We couldn't even go up into this one here, this slightly higher bearish fair value gap. We've just wicked above this one and then immediately pulled back. And so there's lots of ways, I guess, to read into this. We're just not seeing the kind of participation in crypto at the moment, and maybe that's not a bad thing. With all of the bad news that we've had in the market with FTX and the string of bankruptcies and all the issues with Genesis and so on, Grayscale, the fact that the market hasn't been tanking as much as it has is probably a positive, and perhaps we're getting closer to a bottom on Bitcoin. It's probably still a little bit too early to call. I'm still sort of thinking around that 12 to 14,000 mark is going to be where I'd start accumulating some long-term holdings, but realistically we're quite close to that now, and just for the sake of a few $1,000s, it starts to make less sense to miss out on potentially that upside over the longer term. Before we finish up the video, I just thought we'd quickly look at Ethereum. Now, the interesting thing about Ethereum is, in the past anyway, or the recent past, it's actually performed a little bit better than Bitcoin. And I had expectations that that same formation we're talking about on Bitcoin would eventuate here on Ethereum. We'd trade up into this bearish fair value gap, quite deep into it, maybe even up into around sort of 1,500, so around where this swing low is here. But you can see we didn't get anything like that. We barely traded up into that bearish fair value gap. We obviously have cleared this one over the last few days after taking out, the sell side liquidity down here, but we weren't even able to take out this previous swing high here. So even Ethereum was quite weak on this particular impulse, and you can see it's pulled back as well. So again, I don't think this bodes particularly well, and I think that maybe based on the data that we get towards the end of the week, if that inflation data is positive, we might see a pump up into this region. But again, I would be very surprised if we get any follow through. I'd expect any sort of buying into this area will get absorbed, and I think we'll be, attacking this sell side liquidity's relative equal lows down here sometime fairly soon. Thanks for watching my market update for the 10th of January 2023, my first one for the year. I purposefully made today's video a little bit shorter and a bit rapid fire, so I hope you enjoyed that sort of shorter content? If you do, let me know in the comments. Obviously, if you prefer it to be a bit more long form, then let me know in the comments as well. Either way, I hope you enjoyed it and I hope it helps you to navigate your way through the market. If you did, please give it a like to support my channel. And if you'd like to see more content like this, make sure you subscribe to my channel and turn on notifications so that you never miss an update. And remember, if you'd like to hear more from me and join a community of like-minded traders, then make sure you check out the link in the description to subscribe to my free weekly newsletter and to join our Discord. Thanks for watching, and I hope to see you next time.